Silver's in trouble as prices are about to crash. I'm your host, Steve Van Metre, and thanks for joining me for part 2 of our special holiday edition of the Sunday Chart Show. Well, we've got metals, miners, dollars, and bonds, and the energy sector. Let's start this out with gold before we get into our headline story of silver. And gold looks to be in trouble, at least in the short term. I still think a big rally is coming. Let's look at the momentum indicators. We're starting out with the RSI, relative strength indicator. What we want to see is positive momentum is a number of 40 or higher. And we've seen that momentum build here kind of since mid-May. It's been building, and I thought, okay, this for sure. We talked about this last week. It looks like momentum's getting stronger, price is going flat, but right now, price is winning out as momentum now back below 40, slowing down as it sits at 39, potentially headed down to 30, where it may actually then get oversold again, where we find a potential bottom. Let's take a look at the MACD, the moving average convergence divergence strategy, also momentum indicator. What we're looking for is a positive cross where the black line, the MACD line, goes up through the signal line or the red line here. And in this case, momentum was very weak, but that wasn't an issue in the past. We've seen gold prices rally even when momentum here on the MACD was pretty weak, but now the cross is to the downside. It's kind of floated here and rolling over. Not such a good sign. Now let's take a look at Momentum Timer Pro, which blends 3 signals: its own internal signal, an RSI over 40, and a positive cross on the MACD. Looks for 2 of the 3 to confirm to get a buy signal. Well, last 5 days, it's had a sell signal. We know gold is in a downturn because the 1, 3, and 6 month signals are telling us that it's in a downturn. And when something's in a downturn, you're looking at for a bigger bottom to confirm that uptrend or to take a position. Otherwise, when you're in a downtrend and you see these buy signals pop up on the daily, well, that's your short indicator. But I'll put a link up here in the corner in the description below. It's still free for now. We have some big news coming, and of course at some point is going paid, and those only on the email list will get a special one-time discount. All right, let's take a look at price indicator. We see the 2150 100-day moving average all headed lower, momentum bearish mostly only on the 50 and the 100-day, sitting below all the key moving averages. And again, when you get below your moving averages, you look for a counter rally higher, and that's what we're hoping for to see with gold at some point. It seems likely it's happened in the past, but so far we're not seeing that just yet. Doesn't mean it can't happen. Doesn't mean we're not on the cusp of that. Let's look at the 2-year chart now. We've got the volume profile turned on. You can do this with your charts. It shows you where most of the volume has been traded over the period of time you're looking at. And what we see over the last 2 years, this right here, 1800, 1812, is right where all the volume's been traded. That's where price is sitting at the moment. Let's zoom into the 1 year. What do you see? Buyers right below current price, which is really important, because you want to see buying strength below your current position. That's what you want. Let's zoom into the 6 month. You see buyers, above this price point, but that's okay. That means the battle lines are real tight here. The buyers below, the sellers right above. Let's zoom into the 90-day. You see sellers above, 30-day. Again, sellers below, above, and 10-day. For the moment, sellers above. But does that negate a potential bigger picture option here? We've seen when it gets down to this 1800 mark, it's done that twice. You could say potential double bottom here. Buyers came in. It doesn't take much here to get a big move higher. That is something we'd be looking to see gold do. It's certainly not out of the cards to happen. Now let's look at the miners, because we've got a completely different story here in the miners. They have just been hit hard and almost telling you that there's major liquidity problems in the market. GDX RSI 36.5 went from oversold conditions, got a little bit of momentum behind it. Momentum couldn't hold. Prices went down. Now it's back to oversold condition. Can it rally from here? How about the MACD? Had a very weak rally here. Again, kind of like gold, not a real big deal. Doesn't have to go sharply higher. Rolling over, headed lower. Not such a good look. How about Momentum Timer Pro? 13 consecutive days of sell signals in a verified downtrend. So that tells you that any buy signal at this point could be a potential short opportunity or a very, very short-term upside move. If you do take the upside move, make sure you put your stops on, keep them tight. How about the big picture? Well, we see a 2150 100-day moving average price, moving averages to the downside, price down, momentum almost across the board to the downside, below all the key moving averages, below where it's been over the last 1, 3, 6, 9, and 12 months. Of course, that is the indicator for a reversal. Those of you who watch this show, you know when that chart gets red, that is where the opportunities start to come in. You know, we talked about how we thought the bottom here would be around this $29 to $30 price level. It's fallen as low as 26. Let's zoom out, because the concern is when you see GDX start to head lower, it tells you liquidity problems in the market. Buyers are going to keep coming in here no matter what. You can see this volume here. We've kind of got identified a very broad supply zone, and you can see it popping out there. But notice, you know, over the 1 year, sellers above. We saw the 2 year chart, sellers above. How about the 6 month? Sellers above. Any hope? 90 days, sellers way up there. 30 days, sellers above. 10 days, you probably already know the answer. It's sellers above. So that right now the bulls are just trying to get this thing back to the trend line. And of course, the 50-day moving average is way up here around 32. That would make for a nice counter trend rally. The first move to the upside is going to be right here around this $30 price point to see if the previous buyers turn into sellers. So if anything, look for a little counter rally there. Hope that gold moves. If this continues to go, that means the liquidity in the market is gone and a bigger sell-off is coming. How about silver, which we think is pretty much done for and actually headed quite a bit lower, maybe down to 17. We went from oversold conditions back in early to mid-May, back there again now as momentum built but didn't hold. Price went lower, RSI back at 30, back at oversold conditions. How about the MACD? It's rolled over. It's headed lower, saying silver is headed down. How about Momentum Timer Pro? It was trying to pick some buy signals. Now, you see when it gets like this, where it's oscillating back and forth, it means you shouldn't touch whatever it is. In this case, we know the 3 and 6 month are telling us it's a verified downtrend. The 1 month is saying that people in the short term are trying to come into this, but when it bounces back, and when you see it bounce back and forth, just hold off. It's not worth taking a chance at. You notice price on the moving averages head lower, momentum broadly headed lower, still below all the key moving averages. Normally this would tell you there's a potential buying opportunity here, but when we look at the charts, I think it's going to see it doesn't look too good. Here we go over to silver on the 2 year chart. What do we notice? It got into the supply zone. Remember, we talked about how this would potentially rocket up here to this 2 year volume profile line. Turned out the sellers here are real strong. Again, this is potential probability of a major liquidity crisis, and it's just showing up in the metals right now, or at least in the miners for sure, and then in the metals. But look at this. There's very little trading volume here over the last 5 years. Buyers came in here just a teensy top of this broader supply zone. If this does not hold, you're looking at $17 on silver all day long. And if that doesn't hold, let's zoom out to the 10 year chart, because if that doesn't hold, you're getting down into this 15, 16, telling us we're in a recession for sure. And so risk off for silver. Maybe you get a big counter rally, but look, the sellers are all above, all in that sell zone. You see the last 6 months, that's where they're at. How about the 90 days? You see them all here. Remember, we thought that the buyers would pull this out. Didn't happen. These are all sellers here. Buyers are tapped out, maybe due to inflation. They can't come back. All right, let's take a look at dollars, which was a gimme. We saw Momentum Timer Pro pick this one up as a re-entry, or those of you that weren't in it. And sure enough, we talked about how the RSI was slowing down, price came down, but it didn't mean you should exit. Maybe meant you should start looking to add at some point. We see the RSI back near 60. How about the MACD? Had a nice positive cross, took prices higher. It's now flirting just a little bit, and then it's starting to pull back up. That's a good sign. Momentum Timer Pro, 15 days of buy signals. The coveted signal here, the 3 month signal back to max, telling you this is a strong uptrend. And if you missed it, well, you had your opportunity 15 days ago to get back in. Notice price bullish across the moving averages, above all the key ones, above where it's been over the last 12 months. All positive signs, momentum to the upside. Let's take a look at UUP, and then we'll look at DXY. UUP, you see beautiful bottoming pattern. I remember back when we were talking about this on the show, and people said, no, it's going to get worse. It's only going down. Well, sure enough, that's what a bottoming pattern looks like. Look for bonds to make a similar move higher as the dollar heads up. And noticeably, it came down, connected off its moving average on 50-day, bounced up off the 21-day, now headed higher. This is a beautiful picture looking at the 10-day volume profile. You've got buyers below, 30-day, buyers below. How about 90 days? You got it. Buyers below. Even the 6 month, Buyers right below here telling you dollar is headed higher. What does that mean if we look at DXY? Well, we got to zoom way out for DXY here. As we've been talking about, price target on DXY is 107. We're very close to 107. And then from there, you're back to 120 and potentially a massive financial crisis. All right, let's head on to what we got next is bonds. And what's going on with them is also a potential short-term bottom here. How about the RSI at 55? Bonds overlooked, momentum building. And we go from oversold conditions here in April, oversold conditions early May, oversold conditions by mid-June. Price starting to move higher, and RSI going with it. How about the MACD? Positive cross going higher. How about Momentum Timer Pro? 6 days, short-term signal. If you're a long-term investor, you see none, none, none. Wait till you see something here, and then this get to min. The 3-month get to min, that's your stronger signal. Otherwise, all of these are short-term trades. Keep your stops tight in a downtrend. And let's take a look. Bigger picture. Of course, price and momentum are bearish, but now we're back over the 21, back over the 50-day moving average, and a crossover the 50-day gets to be pretty important here, and the 21. So these are what you're looking for in terms of an early stage move. Let's take a look at TLT. Now, of course, the big picture chart is anything that's gone down a lot, you want to look for the reversal. And of course, so what is the first stage of a reversal? Let's zoom in, and that means you get rejection against the 21-day moving average. And then we did multiple times until it crossed. Then you get rejection of where? The 50-day moving average. So price came up, then got pushed back down, and now what happens next? Potentially it even comes back down a little bit into here as the 50-day starts to flatten out. The 21-day flattens out. We want to see the 21-day now start to move higher, which we should start to see, and then we want the 50-day to move flatten out. It might butt up against it to the bottom again, and then you want to see a first cross and then a reconfirmation. Now, how about the volume profile? We'll look at the 10-day. You got buyers below there. How about the 30-day? You got buyers below there. What about the 90-day? Check this out. This bar moved down, and now you see buyers are right and sellers are right, duking it out. Again, could see a little bit of price move down here before it breaks through there and then moves to the upside. How about the 6-month window? Way above, no risk there, hitting that anytime in the next couple of days. But big picture for bonds is a move higher. All right, let's move on to the last one, the energy sector. And what do we have here? Is a bounce off of oversold conditions and looking like it's trying to move higher, but still momentum to the downside. Price moving down with it. How about the MACD? Still early, it's a little early, maybe potential bottoming out of the MACD line here, looking to turn higher. Still in the early stages of that. How about the big picture? Well, MTP, you guys sign up. Next report out on Tuesday. Of course, price being bearish on the 21 and 50, momentum to the downside. Below all the key moving averages, now down where it was below the last 6 months. But the real story for the energy sector is what comes next, and for that we have to zoom out to the max weekly, head over to XLE, and notice again, we talk about when it bounces off this point here, it chops. It would chop between, say, 70. It's going to chop in there between 70 and 70, say 7-ish. It may chop for a little while, and then of course what happens next? Bottom falls out, bottom falls out, bottom falls out, bottom falls out. Look for the bottom to fall out. Next support down here at 57. Energy sector trade is probably done unless you like the short side of the market, and then perhaps that is your game. All right, with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. See you back on Tuesday for the regular show. Have a great holiday weekend. Bye now.